Welcome to part second of the video titled Investor Relation Department. To be in an investor relation department, you need to have at least jack of all or probably master of none. So let me give you a simplistic example, very simplistic example. All the big companies like Apple, Amazon, Facebook, Google, all these companies, they have business across the globe. Since they have business across the globe, they are subject to have currency fluctuation in their books. Because let's take an example of Amazon. Amazon is having business in dollar, GBP, Japanese yen, Swiss franc, probably Singapore dollar, New Zealand dollar, Canadian dollar, Australian dollar. You just name the currency and they do not have the business. And sometimes they get hit also because of currency movement. So today, if euro will come to 1, which is currently 1.10, then Amazon is having exposure in Europe because they have their business in Europe. They would substantially hit if they not hedged. If they not hedged in an appropriate way. That would be the better word. Amazon will get hit. But there are three forms of hedging: cash flow hedging, fair value hedging, and net investment hedging. Amazon is such a big and wonderful company. So common sense reflects they are taking all three. I'm not here deliberating what the hell is cash flow hedging, what the hell is fair value hedging, what is net investment hedging. That you please check yourself. I have uploaded many videos on YouTube explaining them, including liquidity swaps. If you are a person working in the investor relation department, you are aware that every quarter analyst would be getting your financials because you are a listed company. An analyst would love to ask one simple question, which is, suppose in this quarter you reported 10 billion of profit, assuming. The analyst would be asking, guys, on a live conference call, guys, let us know out of this 10 billion you reported, how much is the impact of FX fluctuations? Just this they would be asking. And the CEO will not have the time to have compute this. He needs a ready-made answer. Probably the CFO would be replying to this query. And he need a ready-made answer. So if I am from an investor relationship department of Amazon, who is, by the way, is the largest e-commerce player, the share price is near about $3,300 per stock, then I need to make this numerical analysis ready. How would be the answer? Sir, suppose Morgan Stanley analyst asking from Goldman Sachs, from Amazon, that you have reported 10 billion of PAT. PAT means bottom line, profit after tax. Out of this 10 billion, how much is the currency valuation, currency impact? Then this would be the answer if I am from investor relationship department. So 35% of the revenue of Amazon is coming from USD. And Amazon is a principally US based company, which means we are having zero exposure. Now, in this quarter, 65% of the revenue came other than dollar, which includes GBP, Euro, Swiss franc, and all. Tick, 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 tick. This is the composition. So, example, GBP 5% revenue is coming, Euro 7% revenue is coming, probably Euro 15% revenue is coming, Swiss franc 5% revenue is coming, like this, tick, 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 total 65%. The total hedge book as we speak, multi-currency hedge book, which is cash flow, is near about $1.8 billion. And as we speak, the mark to market, which I'm talking L1, is $550 million. Now, having said that, we have L2, L1 exposure, L2 exposure, and L3 exposure, which is as per fair valuation hierarchy. But your question is the impact on the PAT, which is called bottom line. So the reclassification adjustment booked by the accounting team in the last quarter is roughly $45 million. While the MTM reversal, which includes mark to market reversal, is $100 million. Fortunately, the reclassification adjustment and MTM reversal both in the credit side of the P&L, which means $145 billion. So, to reply, out of 10 billion PAT, which is profit after tax or bottom line, reported by Amazon, $145 million belongs to the FX adjustment. Question answered. Now let Morgan Stanley to compute 145 million out of 10 billion. Probably maximum he could ask from you, what is this number in the last quarter? So tell me this number in the last 5 quarters. This is maximum he could ask. And you need to get ready for that. Investor relation is one of the most powerful department in the organization. Because like front office, like I dealt in front office, in the front office we deal with markets, we deal with banks, we deal with depository institutions, we deal with hedge funds and all. Similarly, investor relation department or the officers of the investor relation deal with the analyst and the analyst mindset. That's very important. Henceforth, they need to understand one thing very, very carefully, that they can be asked anything which may be uncomfortable to them. I repeat, which may be uncomfortable to them. Numerical analysis is very important, and the example which I stated is one of the most simplistic example I gave in the world of investor relation. That's very important. But unfortunately, during my career, even after my career, and now I have my own fund, I interacted with many investor relation officers. One consensus is very clear, that majority of the reporting in the investor relation is below par, except the top American banks like Goldman, JP. Their reporting is above excellence. And the job of the investor relation officer is more complicated when you are at Basel III, like Goldman Sachs, JP Morgan, and all of them. Because here the level of reporting, the complexity of reporting is more than what you even cannot envisage. Of course, as the time progresses, we would be covering more on that. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, which is 9899242978. You can have our back office number 9818485155. We are very soon launching a lot of training programs for investor relations. Have a great time.